I have been wanting to make a video outside for quite some time now, but it has been raining and raining and raining some more. So for the past 4 or 5 days, and today we finally have a blue sky. I hope you can see it. I think you can. So I'm going to be making this video. It's going to be a trading video, of course, but I decided to just come and make it here on the beach because I'm not going to be showing charts. So I wanted to talk about this 30-day trading challenge that I have been, it's been going on for maybe 3 weeks, maybe 2 weeks and a half, something like that. So I gave two very specific rules. One of them was to use the formula so that you only risk 1% of your account in each given trade, no matter how wide or tight your stop loss is. You only risk 1% of your entire trading account. This gives you room to lose 100 times before you get liquidated, right? So this was rule number one. I gave that formula on the video, and by the way, if you don't know the video, it's you can find it on my website under free education, free courses, and the course level 2, it's called money management. And the first video of the course level 2 is, you will see it says 30-day challenge, and I explain this formula. Another rule I gave for this video, for this trading challenge, was to not have more than 2 positions open at any given time. And I want to explain this a little bit better. I've been talking about this on the premium group for members for quite some time now, but I wanted to put it out here on YouTube as well, because this is a very expensive lesson I have learned myself trading forex. When I used to trade forex, I lost a lot of money. And one of the reasons, one of the mistakes I used to make a lot, I made this mistake so many times before I stopped making it. And it was to have a bunch of positions open pointing to the same direction. For example, a bunch of longs or a bunch of shorts. When I was trading forex, at the end of the day, forex are currencies, just like, it's very similar with cryptocurrencies, because you usually the pairs are usually in forex are usually against the US dollar, and in cryptocurrencies are usually against the US dollar or the BTC. Oh, well, now it's easier to do it versus Ethereum as well, or Bitcoin Cash. But let's just stick to this part of the market that we're going through. We're charting everything versus the US dollar, right? We chart BTC versus USD, Ethereum versus USD, BCH versus USD. Everything is traded versus the US dollar. So if you have a bunch of positions going short, going to the same direction, in this case short, if the market bounces or reverses, you're gonna lose all of your positions. So this happened to me trading forex so many times. For example, if I saw the US dollar going bearish, say for example it hit resistance and it started to tank and go down, and I would look at the US dollar index and it was super bearish, and then I would look at the US dollar, with the Australian dollar, and the US dollar bearish. I would look at the euro versus the US dollar, and I would see the US dollar bearish against the euro as well, against the Australian dollar, against the Japanese yen, and it was super bearish. So I was like, well, the US dollar looks bearish when traded versus every other currency, and also the US dollar index is bearish. So I'm gonna go short on the US dollar in all these charts. And I would open a bunch of short positions, to short the US dollar versus every other currency. And what happened many times, I would say 40% of the times, which is almost half of the times. It's a big percent, because this is the reality of trading. You're going to lose 40% of the times as the normal. So almost half of the times that I would lose positions, if I had a bunch of positions open going to the same direction and I lose these, then it means I'm losing all of these positions. And if I lose 40% of the times, and this time I lost so many trades, I'm going to turn around, then that's enough to, it's going to be very hard to recover from this. It's going to be very hard to, to make winning trades, to recover, to take your account back up what it was before losing all this bunch of trades it the same day at the same time because the market bounced or reversed or whatever. You know, the markets reverse and bounce all the time. There's nothing you can do about it. So you need to protect yourself and not open more than 2 positions pointing to the same direction when you are trading currencies or cryptocurrencies. If you're charting all the currencies versus the same one currency, in this case the US dollar, it means you don't go long or short in all of them. You never have more than 2 positions going to the same direction open at one given time. So that's a very important lesson for money management. As I said, I've learned the hard way. This one specifically is not that I've learned from someone else or is a technique that I saw on the internet or anything. I've learned it by losing a lot of money trading forex. Now there's this one coin, Binance coin. Some other member asked me to review this chart, to look at this chart. So I looked at this chart and it's actually bullish, at least the last time I checked. I think I reviewed this chart maybe 1 week ago for members. Actually for free members as well. The video is on my website. It's free and open for anyone to watch. It's just not on YouTube. I was saying Binance was bullish because it's doing higher highs and higher lows. So if you have a long position on Binance versus the US dollar or versus BTC, then okay, you can have 2 other positions open for short positions. You can have 3 positions open in this case, but 1 is going long and the other 2 are going short, but no more than 2 going the same direction, because if the market bounces or reverses, you're going to lose all of them. So I wanted to make this point very clear because it's important. What else I wanted to say? Yeah, I'm not making a lot of videos for YouTube lately because I'm doing this 30-day challenge. So I'm giving signals on the premium group. So I'm not going to be reviewing the charts on free YouTube when there's, you know, some people that's actually paying for these signals. So I'm planning to reveal all these signals once the challenge finishes. So far it's going okay. The first trade was a 12% gain. Then there's then 2 stop losses were hit for a 1% loss each. So that's still 10% up overall. And then another position, it's still open and it's right now for a break even. So it's still on a break even. So it's, you know, it's still open. Nothing really happening there yet. So yeah, overall going good. If you are losing money with this 30-day challenge, then obviously you're not following the rules. You're either not using the formula or not using the exact signals, or you're opening a bunch of trades, many more than you should. So, but if you stick to the actual signals, that's all you have to do basically. Use the formula and use the exact same signals, and you would be so far 10% up overall. By the way, I'm organizing all these signals on my website. If you click here where it says signals, you see all of the signals that I have been sharing and that I will share for the trading challenge. They will all be here. And when the positions close, I will be revealing them on YouTube, and I will be showing, you know, the winners, the losers, and everything in between. It's not like I'm giving signals every 5 minutes. Maybe I'm giving, you know, one signal every 3-4 days, or something like that, every 2-3 days or 3-4 days. I'm looking at the 4-hour candles, so it's not very short time frames. And yeah, so that's what's going on. And yeah, I think that's all for the video of today, guys. So thank you very much for watching, and I will see you soon. Bye.